All right, so let's dig into the first thing here, as we like to do, which is the Core Logic report. Core Logic. All right, Grant, I can't resist. I'm jumping in first on this, and I'd love your commentary.
I assumed you read it.
A few times, actually.
Hey, yeah, good start.
I was really surprised when I read this report to see how much things have slowed. Right. And to give that context is I kind of expected prices to keep falling as interest rates have gone up. We'll cover that later, but thank you, Dr. Lowe. So when I logged into this report and see that we've practically had a flat month, like if you look nationally, the previous month was like a 1% fall, where to now it's like, I'm going to call it flat. It's practically zero, which I think is a significant shift in market. I think it's really significant. It tees up some things we've got lined up to cover in the rest of this conversation, but that was the first thing that kind of really caught me by surprise. Was there anything else that you kind of saw in this?
It was one of the observations that I saw, and I'm like, I wonder what impact that's had. So I literally just jumped on the online valuation calculators and put in my properties just to see if it was real. Like, I wonder, did every property up by $5,000 specifically? So I got no idea what that is, but I did find that plateau just an interesting observation when I think that interest rates are going to continue a little bit more. And I'm like, that's a bit interesting. I didn't think it was going to go flat that quick.
No, me either. They really didn't. And then the other observation that I thought was quite fascinating, I mean, this one I did expect. Rents are just still screaming up. Rents be pushing hard.
Did you see unit rents? The rents on units just go on an absolute tear.
Well, this is where I think ultimately this report comes to like the bottom of it, and what I think we should really discuss here is I've had a bit of a change of feeling on the unit market, and I'll put that into two parts, is like the townhouses and apartment market. I've seen a significant shift here, and it's like if you go back to when we were in what I call the pandemic times, they're practically giving them away. The vacancies were through the roof, and it's like if you look to this year, that's changed so significantly now. You'd have to say it's probably one of the higher performing parts of the market. How's your opinion on units and townhouses at the moment?
It changed. So looking at the Core Logic report, what you saw during the big C period was just a rental yield tanking. Right? I remember I negotiated my rent in Melbourne, and it basically halved. It was like $250 off my rent. And I was like, there was just empty apartments after empty apartments, and landlords were actually scared to have their place vacant because they didn't know when it was going to be full. And now obviously I'm like, cool, maybe these are just coming back to a normality. But now I'm actually looking at this saying, and it was an interesting view when I saw this. I said, I'm like, does this have space to continue to run? And then I thought back to when I lived overseas for a short period of time in Asia. Dude, the cities are full apartments, more so than what we've got in a Melbourne or a Sydney. And I go, yeah, maybe this is just our start to becoming a little bit more urbanized in sort of inner city areas, because there's just not that availability. And so my view went from I just want land and houses, and that is my investment hypothesis, to now going, potentially in my portfolio, I can start looking at something like a townhouse or a small unit or something like that, where there is the good yield potential plus a decent amount of growth, as opposed to me just completely writing it off and just going, I never want to look at this thing. Now I'm starting to look at it going, maybe there is a spot in my portfolio for something like this.
So I went deeper, much deeper.
You went deeper? All right, okay, give it to us.
All right, so one of our favorite investors is a guy called Howard Marks, and he very much has instilled the idea into me that it's not what the asset is, it's what you pay for it. So it makes a huge difference. Like you might have a company, for example, actually we should keep it property focused, but it's like you might have an area that isn't the best, but if the property's $1, it's a great buy. You're going to be able to sell it for more than $1. As an investor, isn't that our goal? To make money?
Completely.
Right.
Find the right asset.
Where if you massively overpay for a great asset, so let's say a premium asset, it's $1 million and you pay $2 million for it. It's like, you got to wait for that thing to double just to break even. So even though the asset is better, what you pay for it plays such a significant role in how it does. Right? And I also think when it comes to property investing, there's this huge bias, where because so many things have happened with apartments and people buying off the plan, it's become like this hated asset.
Yep.
Like in the investor circle, so many people are sitting there going, do you know what? I wouldn't buy an apartment or a townhouse. I've heard about this with strata. I've heard about this, land value. That's where the money is to be made. And I'm at this point willing to go on the record, speculating, of course, right? It's more I'm going on the record for my own ego, not necessarily justifying other people's investments, Grant, please note. So this is definitely not financial advice, but something I am looking at intently. I think because the unit and townhouse market has got so much hate, I think because so many people want to live in these locations and just can't afford houses, and the constriction mixed in with interest rates being higher, I'm calling it now, units and townhouses, not in CBDs. So I'm not talking about like Melbourne CBDs. I'm talking about those nice suburbs around it, your Brightons, your Hawthorns, your Turaks, your Rose Bays.
Yeah, Richmond. Yeah.
Yep. Richmond, clearly we're very Victoria focused. I'm sure if someone's in another state, they can chime in and offer something great as well. Are going to go on a tear. And I'll put one more layer on this. Melbourne, Sydney, Brisbane predominantly, just because of space restrictions. In Western Australia, they still have a lot of room where I think that's not going to be as true, and same for Adelaide. But I think this is potentially one of the plays we're going to see unravel and unfold in front of us. And this is something that I think is going to be particularly interesting for investors going forward.
That is where my research started of going, I wonder what this looks like. And you have gone significantly deeper than I had. I had a whole heap of personal bias that I had to get over before I started looking at it, but down that way. But what was it? There was this news, a news segment where, like in Richmond, there was like only 8 places available for rent, and there was like 100 people per place. And I'm just like, they just can't, like the only thing you can put there is like units and townhouses. Like there is no space for dedicated blocks of land and actual sort of isolated housing at all. So I concur with you on this. The only thing that I want to look at is going, okay, what does it look like over a long period of time? And so there's a lot more research that I want to do before I just go and start buying them willy-nilly and going, even to your point around strata fees, even to your point about like potential unlimited supply. Like you can just keep going vertical. So what does it look like in order to get a better asset class?
Oh, could we go there?
All right, let's do it.
All right. So this is why I say the CBD thing's really interesting. And I want to talk about, don't let me forget, talk about land tax here, because I think it's a really interesting thing as well.
I got you.
Okay, cheers. So Melbourne CBD, if you look at that right now, or even Sydney CBD, I think there's very real risk that you just get another tower built next to you. Right? Supply risk is real. Like the way we walked through Melbourne the other day. How many cranes are up? How much stock's coming onto the market? I think a legitimate supply risk is there.
There was a record. There was like 400 cranes or something like that in Australia, which is like a record number, full stop. So yes. Yes.
Okay, so if you're going into those types of things, I can see real risk massively. But if you step out in the market, so this is where I do have my residence, right? Although we've got to be careful, right? Because people might start following me around now, so be careful how I say this. I looked into it specifically. They won't recognize you. Yeah, with these sunnies, we'll be safe.
Go on.
But I looked into this more deeply here around the suburbs, and I'll use specifically Brighton because housing is really expensive here. Like it's not unheard of to pay $3 million to $5 million for a house around here. Mind you, it's a nice house, but it's like it's an expensive area where there's still the ability to buy townhouses and apartments for like less than half of that. Right, so there's a really big discrepancy between cost, but people want to live here for the access. And you say, well, what's the supply and demand risk around that in this area? I'm not sure there's a council you would want to less be near to get building approvals through. The people of Brighton, like all these older doctors and lawyers who have bought into this suburb, the last thing they want is people putting up massive developments near them. So they find it hard. Really hard. And all those housewives with too much time on their hands, they're the ones making trouble. No, that's a massive speculation. I shouldn't say that's true, although I suspect it is in a little bit here. I'm joking. Although I would love to know for real, who are the people putting in the objections? I would love to know that. Is it the nesters worried about their view? A whole bunch of things. But the ability to build massive amounts of supply in Brighton specifically, it's really hard. Really hard. So I'm not necessarily sure that type of setup is there. And then the other thing is too is that big towers, to me, I don't like the idea of investing in big towers because there's a risk that comes with that as they age and costs and body corporate. But those smaller type developments, let's say under 20, that have got like really good sized, in this case it would be apartments or little townhouses. Even I would live in some of these. They're fantastic. They're really high quality. They're like bigger than what you would consider an apartment or townhouse. They're practically homes on small blocks of land or in the sky slightly.
And one of the things that I've seen is there's a place in Melbourne called South Yarra where they just went crazy on apartment buildings. And like looking at that, it's just become this infinite supply of just properties. Like it's just like, it doesn't matter. It doesn't matter how high, it doesn't matter where. And it just created like a school zone, essentially. Like all the uni students and all like the young professionals and stuff move there. And then they say, well, it's almost like a stepping stone to get to your Brightons. It's like, well, okay, we're going to be here for a couple of years and then we're going to progress out, as opposed to your point around townhouses, which is like, how do I stay here and raise a family here and continue on here? And I concur, like you ain't going to see massive buildings in the Vaucluses and Rose Bays and stuff of the world. Like it's just not going to go up, like, or the middle parks of Melbourne. All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.